TR Srinivasan joins us, CFO with Varroc Engineering. Mr. Srinivasan, good morning. Thank you for joining us. The first question is that given that where the auto slowdown is, given what is happening to the two-wheeler space, since you are a supplier to the auto companies, the OEM suppliers, what is happening to your business?
Well, obviously, I think the story on the automobile sector is well known, I think, and obviously there are headlines every day in your sister publications as well as other publications. So industry is going through a downturn, no doubt, not only in India, but also abroad. And as an auto component supplier, we are not just focused on India. Of course, that's where our original business started. But we also have a sizable presence abroad. Almost more than 60% of our revenue comes from our foreign operations, which is focused on the passenger vehicle market. So across regions, across segments, we are seeing a slowdown or actually a degrowth in the last 3 to 4 quarters. And that trend seems to be continuing now. So that obviously puts pressure on auto component makers like us to maintain our revenue and margins, but we are doing our best to cope with that and manage that downturn.
Just looking at the overall consolidated margin picture, that has come in at about 9.4% versus 7.7% on a year-on-year basis. So tell us what exactly has aided that margin, and what are going forward, what are your cost-cutting measures that you're taking?
Yeah, essentially in the downturn first of all, in terms of a strategy of focusing on increasing our wallet share with OEMs where we have a smaller presence currently is paying off, both in India and abroad. So that's why even though the market has been degrowing in double digits, our revenue has been more or less flat. We have been able to perform better than the market. So that is helping us in the overall business performance. Coming to margins, we have actually managed to marginally improve it from last year to this year by about 20 basis points overall. This is essentially because of better raw material procurement as well as some cost control initiatives that we have launched across the organization.
What are the sound bites you're getting from your buyers, or in this case, OEMs, for rest of the year? Are they ready to stick their neck out and commit that, look, don't cut your production, we will continue to support you in this difficult time, or they are telling you, look, times are bad and we'll have to pull some strings?
Yeah, so we are in very close communication with our OEM customers, and I think the challenge for everyone in the industry is that the visibility in the near term is quite limited. So that's across the supply chain, OEMs as dealers and so on. And in this kind of situation, obviously everybody is trying to manage it and be more conservative than probably would be the case in terms of planning of production, procurement, and so on. I think the major issue industry has been dealing with is a high pipeline inventory with dealerships and so on, which I think seems to be gradually improving, but I think there is still some way to go. But visibility, as I said, near term is limited, and we are very closely working and adapting our production schedules and plans to align with the OEM requirements. So it's very difficult to look beyond even a month at this stage. That's the situation where we are in.
But I'm sure a lot of investors and shareholders are curious to know the overall order pipeline for the company. You had identified Volkswagen, Ford, but at a time when a lot of these companies as well are giving a cautious outlook, what do you see filtering in for the order pipeline? What is making you optimistic?
Yeah, I think on the one hand, we are doing quite well in terms of winning new orders and programs from OEMs where we are comparatively small. Like you mentioned, globally, our focus is to grow share with large passenger vehicle OEMs like Volkswagen, Renault, Nissan. There we have been quite successful and continue to be so even in the current year. The only challenge is their own volumes are not growing as much as they were anticipating. So our growth has been muted to that extent. The same goes in India. So we have also been focused on increasing share with OEMs like Hero and TVS, where we have made some breakthroughs and we are making good progress. But again, because of the overall market situation, it is not yet translating into strong revenue growth. But I'm sure all this will help us when the market picks up and we will see a much faster rate of growth.
Understand how geared up are you for whenever the electric vehicles hit the market, and what is it that you're going to be catering to EVs? I know it may be a far-fetched step, but it seems like it's a reality which may happen very soon.
Yes, I mean, the government is definitely giving a big push to EVs, especially in the two-wheeler space. So we are gearing ourselves for that. But if you look at our current product portfolio, our exposure to engine or the IC technology is very limited because we are not into the engine per se. So for us, EV is more as an opportunity rather than a threat. So we have, using our own in-house R&D resources, developed traction motors which will be used in two-wheeler EVs. Now that is prototype is ready and it's under testing by a few OEMs. And if it comes through, picks up, that could be a big opportunity for us, upside for us, as and when the electrical volume, two-wheeler volumes pick up. And we are also focusing on lightweighting, etc., which will also become more critical as EVs become more popular, because for energy conservation and prolonging battery life and so on. So that's another area we are continuously working on. So on the overall, EV for us is more of an opportunity than a threat. And even though we think it will take some time to become a significant part of the market, so probably not in the next year or two, but in the medium to longer term, that's going to be a big key segment, and we are fully geared up for that.
Okay, and finally, just tell us a little bit about when we can see our overall profitability improving and what are the steps that you're taking for this.
I wish I had a crystal glass so I can tell you, because as I said, the visibility in terms of the market conditions and the demand pickup is quite limited. So it's a bit difficult to foresee how it will translate into business financials. But as I said, we are using the opportunity to get our cost structure under control, lower the break-even point, optimize the capacity, utilization of the capacity we already have, and so on. So we hope in the next 2 or 3 quarters, we'll start seeing some signs of pickup and improvement, especially with BS6 vehicles coming into play. But we need to wait and watch.
I won't probe you more on that, but thanks very much for being candid, telling us about how the situation is and what the outlook is for Varroc Engineering.